Now we're talking. Back in the action once again. Back to work tonight, guys and gals. Wednesday evening, after all. September the 30th, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, don't forget, my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. And I got a great video in store for you guys and gals tonight. The charts are all prepped up in the background, as you can see. Got the E-minis, we got the oil, and we got the gold on our radar for tomorrow. Boy, speaking of tomorrow, we get some big news coming our way tomorrow. And of course, the charts are telling us we got some pretty good setups on our radar for tomorrow. We're going to break this all down into some nice bite-sized pieces for you guys to succeed with tomorrow. Before we jump in, though, and get this lesson started, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you always get this stuff delivered right to your inbox every evening at the closing bell. And don't forget, if you guys have any questions at all, drop those questions in the comment section below. I'll get them all answered as soon as we finish up later on this evening. And don't forget, I always love when you guys tune in every evening. If you enjoyed this video as much as I enjoy making it for you guys, if you're like me and you rely on this nightly newsletter to get your mind right and get those charts right for tomorrow, always appreciate you guys hitting that thumbs up button for me here on the video tonight. So make sure you subscribe to our channel, drop those questions in the comment section below, and if you love the content, hit that thumbs up button for me. Thank you so much for tuning in. But enough of the introduction, though. Let's get this party going. Time is ticking. Thursday is right around the corner. And let's kick off tonight's session, of course, with tomorrow's calendar. Now, I've been talking about this all week. We're going into the end of the month, the end of the quarter. And even though tomorrow is the brand new start of a new month and a new quarter, we do anticipate to continue to see more of this impulsive kind of sense of urgency, the increased volatility, right? We do expect to see increased volatility as we continue throughout the rest of this week. And we definitely saw that in many different forms today, right? Gold was all over the place. Oil was pretty tame, right? But the S&P, of course, took the stairs up and the elevator down, as they say. But the bottom line is we do anticipate as we transition into a new month, into a new quarter, as I mentioned in last night's newsletter, we get a little bit of that position adjustments, right? Window dressing, as they call it in the biz. And so we know that, of course, volatility and again, the impulsiveness, the unpredictability will continue. So don't be surprised if we see a bunch more of a little bit more we saw this afternoon here coming at us right tomorrow. Now, looking at tomorrow's trading session, tomorrow you could say if we didn't have that employment number on Friday, you could say tomorrow has the biggest news of the week. But with the employment number on Friday, you got to give the crown for the biggest news event of the week to that employment number there on Friday. But I will say we've got some pretty big news coming our way here tomorrow. As you can see, typical Thursday morning, we start off with that jobless claims report and, of course, personal income at 8:30 Eastern time. Now, remember, those jobless claims have really been a spark plug for these markets lately. Now, this, of course, just started to, we really just recently started seeing the jobless claims become a market-moving event with the onset of this pandemic. So jobless claims potentially moving the needle for us early tomorrow morning. But the big news, though, the big news from what I would assume, the big news tomorrow is that PMI number, that manufacturing number. Anytime we see any of these acronyms, right? Acronyms, PMI, PPI, CPI, ISM, right? Anytime you see three letters right in front of one of these news events, I'm not joking, right? I'm not joking. You can pretty much go back. Anytime you see these acronyms, those are usually going to be news events that you want to pay attention to. So big deal tomorrow at 9:45 because, of course, we have that manufacturing number. Now, I'm not sure if you guys noticed this, but we saw big manufacturing data being supported out of the news today, right? The Chicago PMI today, the ADP employment report, the GDP, everything really supported this idea that manufacturing is flying right now. And I would imagine it makes sense, right? The recovery process begun. We've from what we've been told, they moved a lot of the overseas production back home again, right? Yada, yada, yada. We've all seen the news headlines. My big thing about tomorrow is, will this number support, right? That's what what everyone's going to be waiting on tomorrow. We saw some really rosy numbers, especially out of the ADP employment report here this morning, which paints a very good picture for Friday's non-farm payroll number. But I think the big thing for tomorrow, though, if you're around your desk tomorrow at 9:45, 10 o'clock, the big thing for tomorrow, though, will those perform as well? Because if we get Wednesday manufacturing looks good and Thursday manufacturing looks good, these markets could really start to rev their engines here as we go into that 10 o'clock into 11 o'clock block. And don't forget, that has been where some of the best trades lately have been, right, in that 10 o'clock to 11 o'clock hour. So hopefully that PMI and the ISM number will hopefully give this thing a kick in the rear end tomorrow, either long or short. I don't care what direction it goes, but it should give us some definite impulsiveness, right? Some definite movement, and hopefully some pretty good setups in the trade room. So really two big blocks, 8:30 and 9:45. If I could only be at my desk for an hour tomorrow, when would I do it? It would definitely be 9:45 to 10:45. If that was all I had to trade with, right? I try to always give you guys a good target each day. Obviously, we'll be in our trade room as of 8 o'clock tomorrow, right? Trading together with all the members in our trade room. But if you could only be there for an hour tomorrow, yeah, that manufacturing number probably going to be the biggest potential mover. Not to say that jobless claims report won't be a move the needle event as well. But if you only had an hour tomorrow, 9:45 to 10:45 to 11 o'clock should definitely be the sweet spot for tomorrow. Now, like I mentioned earlier, right, we've also got that employment number on Friday. Now, why does that matter tomorrow? Because remember, I realize that most of us are all individual traders. We're trading our own capital, right? But if you were working at a big trading firm and you were trading tens of thousands of contracts, right, hedging or speculating on behalf of your clients, you'd be very concerned tomorrow afternoon, right? Because you'd have to really make sure you protect yourself against any potential whipsaws or any surprises on Friday morning. So because the bottom line is, because there's such a big news event on Friday, the big money, so to speak, right? The big bankers, right? The big hedgers, the big speculators, they're going to have a hard time doing much tomorrow afternoon. So just be aware of that. Things do tend to slow down in that kind of last third of the session, right? So 2 o'clock, right, to 5 o'clock, ish, right, tomorrow afternoon. So the first 2/3 of the session tomorrow are completely good to go. But of course, again, last third of the day tomorrow, 2 o'clock to 5 o'clock, 2:30 to 5 o'clock. Just be aware of that as we go into that non-farm payroll report on Friday. And then, of course, we get a big news report coming on Friday. So make sure you tune in tomorrow night, and we'll break it all down for Friday's trading session. Speaking of trading sessions, we do this together every morning in our trade room. I would love to have you there, right there with me. We open up every morning, 8 o'clock Eastern time, Monday through Friday. What I'll do is I'll put all of the membership links you guys need in the description of this YouTube video, and that way you can get registered for our trade room sessions every morning at the opening bell. Let's keep going, though. Got a lot to cover here tonight on this video newsletter, and time, of course, is ticking. Boy, we got a lot to cover here. Get the S&P. Got the oil, and we got the gold. Man, where do I start here tonight? We have so much to talk about. Gold, of course, right? We saw gold bouncing, right? We had the support level on gold here. Gold kept bouncing. It's a big old wide range, right? Huge wide range on the gold. The most important clue though on gold is we're rotating off the high. If you're a client of mine, you know what that means. If you're not a client of mine, I'm going to go into a lot more detail about why rotation off the high is important if you want to buy this market tomorrow, and if you're trying to sell that market on gold tomorrow. Over on the oil, I'll tell you, I want to be a buyer on oil tomorrow, but that blow off top, it's making me nervous. It's really making me nervous. Bulls took over. They were boxed in last night's newsletter. We talked about that major support level 87, right? So we knew better than to trade short on the oil. We were waiting for the pop. The pop came, but it kept on running, right? I don't like that blow off top. That blow off top makes me very nervous. I think I'm looking short on the black gold, right? The Texas T for tomorrow. I'll share my plan for getting short on oil tomorrow. And over on the E-mini, boy, we talked about last night how all the sellers were trying to sell that pop, right? And boy, oh boy, did they get that pop, right? Let's jump into the E-mini here. and get this party started. But definitely make sure you tune in the whole video tonight to grab the oil and the gold, because we have a lot of really great setups we're watching here for tomorrow. Now, you really can't get your arms around this E-mini market unless you back the truck up a little bit, right? Because you'll remember, this is a weekly trading range. Right? The market is ultimately a range-bound market. Range-bound markets act as a magnet, right? Or the range acts as a magnet. And what do? We sell high, we buy low, we sell high, we buy low, right? This is the general plan in a range. Ranges are balanced. You buy low, you sell high, and you basically trade against breakouts, right? You trade against breakouts. So that's the general idea of what we have here right now. It's a range market. We're going to keep on using that range as a magnet. Now, one thing we talked about last night was we kept seeing this market, well, not kept seeing it, but the market, if you recall, in last night's newsletter had popped up really high at the beginning of the day yesterday, right? Yeah, this is the whole entire day today, right? What does that show? Look at the difference in size there between those two the straight amount of candlesticks there. You can see how much higher volume it was today. The bottom line, though, is we talked about how that market rolled over yesterday, right? And we're talking about how we're drawing in those hidden channels and how they want to sell that pop, right? So excellent job getting short on the S&P. If you watched last night's newsletter, you were locked and loaded for that. And most important thing, what I was going to get to here is we talked about a pendulum swing last night, right? We talked about how the amount of the move above the range, right, yesterday morning would likely produce a move down, which is, nothing's exact, obviously, but we talked about it being roughly the same size on the other side. And, they definitely got that and some. I was surprised when I came in this morning that they didn't get the weekend gap, right? I'm surprised they didn't get that weekend gap on top of it. But the most important thing, though, is you'll notice how the price went up. It came back down and all the way through, right, to that pendulum swing. Well, now, look what happened. We begin this morning. We come out this morning, right? The market makes this big run down. We expected this. We anticipated this move down. It went a bit further than I thought it would go, right? But, hey, that was expected. So now what do? Now we measure this distance. Right? As the market comes back, the bears try once, the bears try twice. What do we call those? We call those nested failures, right? Remember, strong move down. Don't try to force it. Let them try once, let them try twice, and back up. Not to worry, we'll talk more about those nested patterns here throughout the rest of the video tonight. But the bottom line, though, is look what happens, right? They run it down. It gives you one try, two try, and whoop, right back up again. And here we are now, all the way up for a pendulum swing on the other end. I've said this probably 1,000 times on this newsletter. The closest thing I know about magic are these pendulum swings. The way these pendulum swings work, obviously you have to draw the range correctly, right, to get it to work properly. But once you get a hang of drawing the range properly, though, man, oh man, do these pendulums, do they work well. So now, as you can see here, now we run all the way up today, and we, bingo, right, finished off the pendulum swing. That is 2 pendulum swings in one trading day. Did I mention volatility kicks up at the end of the month, right? So 1 pendulum swing down, 1 pendulum swing back up. And it looks like at this point now, right, as this kind of roller coaster keeps going here, it looks like they might be in store here. Will they get another pendulum swing back down again? Because, of course, you can see here, we run lower, we measure the we measure the downside. It projects the high side. We run into resistance up top here, right at the pendulum swing, and now we measure it back down again. Now that was a very long-winded explanation for we're bearish. We're back inside the range, and I think we can all probably make a good guess as far as where these sellers might be trying to go tomorrow. And I'll tell you what's very interesting about this kind of most recent pendulum swing, the third one of the week, I might add, just incredible, is that weekend gap. right? That weekend gap. So tomorrow might be the day that they get that weekend gap filled. Remember, most weekend gaps will get filled by the end of the day on Wednesday. So here we are on Wednesday. Is tomorrow the day for the weekend gap? We'll definitely see. So wild ride this week on the S&P, which is exactly what we expected. We expected to be some pretty good volatility here this week. So now that we kind of know what's going on, right? We're range-bound market. We're bouncing. Well, not bouncing. We're rotating back and forth, right? What do we see here going into tomorrow's trading session? We know the range is a magnet. We want to stay away from the magnet, right? Stay away from there. What do we do? What do we do in a range? We wait for the price to pop up. We sell into buyer failures. We wait for the price to pop down, and we buy into seller failures, right? Now, sometimes those moves down are really strong, and we have a specific, what we call a nested failure, right? We let them try twice, and then we make the run up, right? So there's some small details to it, but that's the general idea. Most important thing right now, we have a very strong move down here coming off the bears, right? Now, anytime we see a strong move in one direction, we know the odds are very good we're going to get another leg in the same direction. Now, you could also argue that there's an equally strong move right back up again, which is why I think if I had it my way tomorrow, we're bearish, right? We got momentum as bearish. I want to be a seller. I want to sell above the range, and I really hope my kind of home run scenario for tomorrow would be I've got this. You'll notice I got this trend line I'm drawing up, right? Those two highs right there. Those are just a little bit higher high right there. If I draw that trend line up, right, that will kill two birds with one stone. Not that I recommend killing two birds with anything, but the bottom line would be strong move up here. I would anticipate they may try to run back up, take out those highs, and that's going to hopefully give us a shot to get short here once again. So if I had it my way tomorrow, my favorite trade here would be I'd like to get us up into that battle zone, specifically right up around these, right up around that resistance high. And again, a lot of this has to do with that strong move, right? The strength of that last pullback, because remember, the knife cuts both ways. A strong move down says we should see one more leg going lower, right? Strong move up, though, it's the same thing, right? They're going to want to get one more leg going higher, and that's why I think that's where I want to look for. That's where the best entry will probably be. And really, at this point, there's kind of three basic scenarios I'm watching for. One is going to be if I can get what I really want here, get that pop up into that area of resistance. What I'd like to do is get these buyers to come over, get them to get fooled by buying that pullback, right? Then I've got their stops within striking distance, right? Now we can sell right into those stop losses, and we can take it out, right? Take the stops out and use that range as a magnet, right? So again, think of it this way: wait for those buyers to come in, wait for the buyers to buy the pullback. Again, we're right into resistance. Horrible spot to be a buyer. Horrible direction right now because of the strength of that move. So once those buyers get in, now we know where stops are. We can sell into stops. We can sell into pullbacks. What I don't want to do, though, is chase it lower, right? It's the one thing I don't want to do. I don't want to chase it lower. So we'll call that a buyer failure pattern into a seller pullback pattern. Now, there's one more potential here, right? Because you can see that channel that I drew down here, right? That channel coming down, right? That is a good-looking channel. We do have resistance there too, right? There's a swing high here, trend line coming down there. So this would also be a spot to consider. The problem I have here, though, is it doesn't solve the problem of selling high. Remember, one of the easiest rules probably one of the most effective rules. Not so easy. It's a little more difficult than you think it is. It seems like it'd be easy, but you always want to try to sell high, sell at resistance. So if I know the range is the magnet, if I get a shallow pullback here, that's not going to give me a very good risk-reward ratio, which means I really got to work hard to get a good entry. If I'm worried about selling too low, my favorite entry pattern will be a trap entry. And so basically what we'll look for is if all we get is a very shallow pullback here, you know what I mean? If all they do is kind of just brush up above that trend line a little bit, you know what I mean? Got that trend line coming down. At the very least, I'd like to be above this 52 level. If I get above that 52, then we're looking pretty good. Now I'll look for that trap, right? And this could also be, we go up, we crash back down, right? And trap above that high too. So it's just, if all we get is a shallow pullback, I'm going to do my very best to get short at as high of a price as I can using that range as a magnet. Now, there's one more scenario that we have to get ready for, and that, of course, is if the market collapses. Actually, there's probably two more scenarios. The second one would be if we sit here sideways inside the range. That would honestly probably be the easier of everything, because whenever we get a bear market, if I can zoom forward a little bit, a bear market into a trading range like this, right? If we do end up going sideways inside that range, right? What's the best pattern? The best pattern now is a buyer failure pattern. Wait for the price to pop up. Wait for the buyers to buy that pullback off the moving average and just sell into those stop losses. So that is a setup we're watching for tomorrow if we get this market going sideways, okay? And then, of course, the fourth scenario now, right? We talked about the deep pullback failure. We talk about the shallow pullback trap, right? We talk about the range, wait for that breakout pullback failure. Again, selling above the high of the range, right? What if the market goes lower? If the market runs lower, really what I'm looking for is that 1, 2, 3 breakout move, right? So strong move down, hold the pullback, jump off the moving average. I'll mark up that low. And what I'll probably do in this hidden channel is try to pin it off that big high, right? Try to find that big high here and look for that short, right, off of that high. Now, the goal of this will be to get in before we get down into these lows, right? We know where they're probably trying to go, right? But I would say you really want to make sure you're getting into this thing before we get down to that 32.92 and change there, right? 32.91, excuse me, right, and change here. So again, it's a 1, 2, 3 breakdown, 1, 2, 3 breakdown into a hidden channel pullback. You might be wondering, why not sell that first one? Well, because remember, it's a range, and it's a good rule of thumb not to do anything instead of a range, right? You'll see lots of times where you'll see strong moves that will pull back, and it kicks out of that range here. So you want to stay out of trouble, stay out of ranges, right? Ranges are where good-looking trades go to fail on you, right, and cost you money. So those are kind of the four scenarios I'm watching for here on the S&P. So failure patterns, trap patterns, and breakout patterns, really. And we cover all of those entry patterns in a lot more detail. I'm just simply drawing the screen right now. But if you want a deeper dive into all of those setups, the deep pullback failures, the shallow pullback traps, the range breakouts, right, the failure patterns, grab that free trading course link. You'll learn all of these patterns by grabbing that link in the upper right-hand corner. I'll put a little pop-up there for you. Grab that link, get registered, right, for our free trading classes. That way you can learn the failures, the traps, the breakout patterns, the fake-out breakout patterns. You'll learn all my favorite tricks in that free trading course. And don't forget, too, I'll put all of the important links you guys need to come out and join me in the trade room or register for the free classes. I'll put them all in the description of this YouTube video as well. All right, so looking pretty good there. How do we get long on this now? Could we buy this market? Because you might be saying right now, Joe, you're crazy, man. What about this move higher? Isn't that, don't the bulls matter too, right? Don't they have a voice? Oh, they definitely do, right? They definitely do. But here's the problem we're going into, because I agree with you. And that was one of the first things I wanted to point out, but I think this momentum is a little bit too strong here right now for the bears. And with this pendulum swing, it would just make sense. But the buyers do have their own strong move. And so where are they trying to get in? They're trying to get in, going back up to retest those highs. There are really two patterns that I would look for here on the S&P. One of them has their eye on that big round number at 3,400. It's basically a reversal pattern. It's a strong move up. It's a pullback to the moving average. It's a jump off the moving average. What do we call that? 1, 2, 3 reversal, right? So 1, 2, 3. Again, I'm not trying to buy that first pullback, right? That's a rookie buy. Momentum is too strong for the bears, right? I'm not going to waste my capital on that. But once I get that 1, 2, 3 reversal now, I know it's not fun to watch it go without you, but once you get that reversal, now mark up that high, mark up that low, right? And look for the first test The first test is always the best test, as we say, right, of the low of that hidden channel. 1, 2, 3 reversal into hidden channel pullback. That's the same pattern as that 1, 2, 3 breakdown, right, hidden channel pullback, in case, right, you were wondering. It's pretty much the exact same pattern. There's some smaller differences between with trend and against trend, but we'll go over that, right, with our clients tomorrow morning in the trade room. The last pattern I would look for to be a buyer on this would be a strong move up, a shallow pullback to the moving average. And this one's going to be tricky because you want to see it pop and a trap, right? A trap off of that low. This one will take, again, a very strong, right? Very strong move higher. It'll blow right through these areas of resistance. It'll be a shallow pullback, a new higher high, right? And a trap as we go. All right, I think we got a pretty good plan here for the S&P. Don't forget, if you have any questions, drop those questions in the comment section below. And I hope by now you subscribed, right, to the YouTube channel. Let's keep going here. S&P is ready to rock and roll here. How about some crude oil? Now I'll tell you, I really want to buy this oil market tomorrow, but there's just something about this blow off top that just doesn't sit well with me. Not at a big round number like this. Now I want to first of all make sure to kind of show you kind of the lay of the land here on this oil, because if you zoom out on this, right? If you zoom out on this, you'll notice, I know, right? It kind of burns the eyes at first to look at it, doesn't it? Right? But you'll notice there's kind of a range, right around that 40. So there is definitely potential. This 40 area may kind of drag this market sideways here for tomorrow. But the big thing about this chart right now is, you may recall that big move down from yesterday. Right? They got that big move down. They sat on, right? Remember last night? They got back above and they closed. And we said, shoot, right? These bears are boxed in. Well, look what happened. They went sideways there for a while. Now, usually when a market goes sideways on those lows, it's usually going to go up and come back and test it before it runs. It never came back and tested it. And then, of course, you see we got this blow off top. The blow off top makes no sense whatsoever in this market condition, because it's going back into that trading range. It's not like they're blowing off the top of it. It doesn't make sense. So the reality is we know we're bullish, but that blow off top, right? That kind of exhaustive top up there, it just doesn't make any sense. The way that it blows off at 40, this, in all reality, they should have kind of come in here and stalled out there right at the 40. And that might be what comes tomorrow. But right now, though, something doesn't feel right about this oil. I'm looking for a short. I'm looking for a short to go back down, at the very least, to get that retest, right? Because I would have expected today, with that market going sideways here, I would have, like I said last night, I was expecting it to go up, right, and come back down again, and then it can go make that run. That's usually what you're going to see in those situations. It's one try for the bears, two try for the bears. It's just the way the market bounced here and then blew off the top here. So, long story short, I won't belabor the point any longer. I want to be a seller on this, but I've got a lot of momentum on the bull side. You can easily see, right? I mean, we're clearly very bullish. And just like I said before, right, anytime we see a strong move in one direction, this base is a big bullseye, right? There's a big bullseye right back up, right, to retest that high. So blow off top, maybe call it a strength move. It doesn't feel like a strength move. Not the way this thing closed here today. And then we're back down below the $40 a barrel level. So what I want to do here is I want to get short, but to get short, I have to anticipate buyers. Because like I said, the first thing I think about is I'm going to draw a trend line off these highs. I'm going to draw it right off these lows. And my first thought was, I'm going to look to be a buyer, right, off of that low. The combination of the range magnet, the blow off top, though, what I hope I can get tomorrow is sort of trap in some of these buyers, right? Trap these buyers in. Here's the pattern that I'm looking for here tomorrow. I'm anticipating bulls are waiting down around 39.72, and I'm hoping that I can get them to try once, get them to try twice, and give me a little trap high right above that one of those swings, right? 1 and 2. The most important thing here will be, I want to let the buyers wrap that rope right around their neck, right? I don't want to sell into them because I don't know how strong they're going to be, right? Remember, we had a big, strong push going higher here, right? That big, strong push, which it looks like a blow off top, but again, we'll see. You know, I'm making an educated guess on my experience on this. I'd like to see us pull back, lower the channel, in that buy zone. I'm kind of using these support levels against the buyers in this case, right? And what I'll look for is buyers try once, buyers try twice, and look for that short with that trap high. Now, we might not get that perfect entry, right? Another short setup I'm looking for would be a 1, 2, 3 roll over, right? So it kind of rolls over and runs lower, mark the low. I will definitely in that situation try to pin this up at these highs. This is where there's a little bit of nuance, right, with those hidden channels, and we'll look for that, right, that short off the high of that hidden channel. What would really make me happy tomorrow is if this move lower was a shallow pullback, lower low like this, because now what I could do is, right, moving average comes over, I can mark up. If I can make this drawing work, I can mark up that high now, and that would really be a powerful setup, right? And what that would do is that would combine that 2-try trap pattern. Again, let's say the market rolls over and runs lower here, right? Shallow pullback, lower low in price. That is a great entry, right? Before we get back down to that 87. 87 we have to think is the major objective. You know, 41 is where they would love to go, right? It's kind of a dream come true for the Bears, but 87 is that support we talked about in last night's newsletter. And again, if I get lucky, I'll be able to combine these levels and make that a channel as well. So those are 3 kind of basic patterns I'm watching for right now to get short on this. Now you'll notice as we open up right now, market's sitting right around 40. So this is where we start to structure a buy plan for tomorrow, right? If we do start to consolidate around this 40 area, you know, I have no problem being wrong about this blow off top, but they got to prove it to me, right? I'm not going to try to buy this thing until they can prove to me here that either they can stabilize, right, or they can keep this party rolling higher. So if we spend a good amount of time, right, going sideways here, well now, remember, think about it this way: the longer the market stays trading on top of one price, it's like a vote, right, for that price, right? Every time a contract trades hands around this 40, right, or around that 39, it's basically like a vote for that being the best price. So the longer it stays there, the more likely it acts like what? It'll act like a magnet, right? That's what ranges are. They're magnets. And so what do we do with a bull market into a range? We look to buy below the range. And what's the best pattern? It's a failure pattern. We wait for the price to pull back. What will happen is eventually the buyers will run out of bullets. The market will pull back. You'll have rookies, right, inexperienced traders. I'm sure there's other traders out there doing it too, right? They'll try to get short off that pullback. And my job is to wait for those bears to get short. I know exactly where their stops are. I know the range now acts as a magnet, and I can buy into those stop losses. A seller failure pattern. Now, maybe they do hold that pullback, right? Maybe they do hold it. One question you might be wondering right now is okay, so at what point does it break out? It breaks out once we get that 1, 2, 3 breakout pattern, right? The same breakout pattern we talked about on the S&P earlier, right? So 1, 2, 3 break down, mark that low, mark that high, and we're selling the first test of the high of that channel. Those are some situations I'm watching for right here if we go sideways. Now, what if we keep going higher? What if we keep going higher here? One thing I want to point out to you here is I'm measuring the size of this leg, and that's what kind of gave me this measured move. And even though I'm not trying to buy that pullback right now, I just want you to see kind of how that will work. Because I mentioned this because let's say, for example, we keep grinding higher. Right? And at that point, obviously, I will not be thinking about, right, that short side anymore. If it keeps on grinding higher, we'll be looking for that pullback, and we'll use that, right? We'll use that same measurement to project the next target. So what if the market goes higher here? So just so you guys know where that measured move will be. The big problem we have is these highs up here. You'll notice a lot of tops up here, right? A lot of tops up here. So if the market tries to go higher, again, it probably will go sideways if it doesn't collapse here on us. But if the market does go higher here, what I'll do is I'll adjust this channel. So one scenario would be, right, the market pumps higher here. We adjust the channel up, right, find that hidden channel, and we're buying what is usually failure into pullback combinations off the low of that new channel, right? So if it does poke higher here, I'll adjust that channel, right, to take it higher here. If it grinds higher, right? If it grinds higher, same thing, right? We'll adjust these channels. We'll find that, right, that larger channel for those failures into pullback combinations. And again, all of these failure into pullback combination patterns I'm talking about would be that classic pull back to the low, let those bears try to get short. Once we see where they get short, now we know where stops are. We can buy into stops. We can buy into pullbacks, right? That's what I keep saying, right? That failure into pullback combination. What usually happens is it goes failure into pullback, pullback into strength, strength into trap, right? Now, obviously, again, don't take this location literally because, again, I'm looking for that 1, that 2, and that trap back down. But imagine the price goes higher, right, and then begins to pull back. It's that seller failure. It's that bullish pullback. It's that trap low, right? Those are some patterns we're waiting for as we go higher. And again, tomorrow morning in the trade room, we'll work all this stuff out together, right? You know, I'm going over all the details now, but there's obviously more possible scenarios that I simply can't uncover everything right here on this relatively short video for what we're trying to cover here tonight. So again, we know the sell side, we know the buy side. Don't forget, any questions, drop those questions in the comment section here below. Now, look, the S&P starting to push higher already. How about some gold? Wrapping things up here on the yellow metal. Boy, where do I start with the gold? What's going on with gold right now? So gold, you'll notice right now, obviously, you know, last night on the newsletter, we talked about, right, this spike in channel. We talked about the buy zone. Remember this from last night? We kept saying, looking for failures, looking for failures. So boy, they definitely milked that buy zone from last night's newsletter, right? They milked that sucker dry, didn't they? Buyers were all over this thing. But the one thing you'll notice is, right, is they never got that range magnet, right? That 1910 range magnet we talked about. I thought for sure one of those was going to get that magnet get taken out there, but it didn't. And what you could look at this as is, to me, I look at this as a range. I think it's a range bomb. I think it's a range. You definitely could see the spike in channel, right? So real quickly here, what does a spike in channel tell us to do? Spike in channel patterns, and we talked about this last night, spike and channel patterns are notorious for deep pullbacks into the base of the channel, right? The key word here is deep pullback, all right? Deep pullback, whenever I see a spike up into a channel, right, I mark up the channel and think about right where the first pullback is and the base of that channel, right? That's where that pullback is going to be. Now, in this particular channel, what's the one characteristic you notice about it? It's wide. It's really, really wide. Now, why is the width important? The width is important because momentum, right? Momentum. Now, what is very important is what's really interesting is, if I zoom in quickly on this, you'll notice they didn't take out those lows. That, in my book, is a really important clue, right? There have to be a lot of buyers sitting right underneath this 85.8 area, which goes right hand in hand with this spike in channel kind of plan, right? So I want to take out these lows, but again, I want to get down into the base of that channel. Now, again, it's a wide channel. Why is it important? Because of momentum. By the time we get there, and this is where that rotation off the high comes in play, right? That's why I said earlier, if you're a client of mine, we talk about this all the time. When it rotates off the high, watch out for that momentum, right? Now, again, this is specifically for, right, buying in that deep, right, that deep pullback. So when we rotate up the high like that, if we keep going down, what's the concern? The concern is we have a steamroller here taking this thing lower. So how do I avoid, how do I buy low while not buying into that freight train? You don't try to pick the bottom. You let them try a couple times. Once, twice, and back up from there. Remember that big move down in the S&P? Remember that big move down in the S&P here, right from back here? Remember that one? Big move down, right? This is, believe it or not, early today, right? It seems like forever ago, right? So that big strong move down. See what happened? They tried once, they tried twice, and they go back up. That's the same basic idea, right, as looking for here on the gold, right? So we get that move down, looking for one, looking for two, and back up. That's one piece of this puzzle. The other piece, which I think is more important, to be honest, is this range, right? Now the range, I think the range looks great. It's a little bit tough to find, and it's a relatively wide range. Now wide ranges are the same problem. Not a problem so much, just the same small detail. As we rotate from above the top of that high, again, we haven't taken out any of these lows yet. You have to expect there's going to be a lot of buyers trying to eagerly to get in around that 85 to 80 area. What I'd like to do is because we have this range, remember, what is a range? Ranges are balanced. Ranges are magnets. What do we do with ranges? We buy low with seller failures. We sell high with buyer failures, right? We avoid the middle. We fade the breakouts. Buy low, sell high, focus on failures, as we always say in our trade room. The problem is, though, with that momentum coming off that top, very, very strong momentum here going lower. Let's get some of these lows taken out. Right? Let's take out some of these lows. Let's get some of these bears, right, to dig their grave, and let's buy right back into those stop losses. The reality is I'd be very concerned trading in this area right now, right? Because it's all beat up, right? Again, they really milked this whole entire range. There's nothing new to be seen here, right? They got it once, they got it twice, they got it once, they got it twice. So I really want to what's the word? I want to explore new territory, right? If you're a kind of volume profile theorist, I did a lot of studying on volume profile, market auction theory, right? We are there. Hopefully, we'll see some bears exploring new prices down here, right? Try to poke some of these bulls out, run some stops, get those bears try a couple times, right, and back up as we go. Now, honestly, I think the same thing applies above too. I think if the market runs higher here, and again, I would want to get some highs taken out here, right? I wouldn't want to do it. I wouldn't want to do it in this kind of range here. Get me up, take out some highs, and I think you can probably get that same nested, right, failure pattern on the way back down again. So that's kind of my goal here. Stay out of the middle, buy low, sell high, and beware that range rotation off the highs here. Now, let's talk some more specifics on this, right? So we know what to avoid. We know to avoid the middle of the range. As we go lower, keep your eyes open for that trend line, right? So we get one try for the bears, goes up, right? Draw that trend line. Two try for the bears. That is a great kind of variation of that nested two try failure. Another one of my favorites here, right, is we go sharply one try for the bears, two try for the bears, trap low. These are my favorites, right? I'll be honest though, we don't get them as often as I would like, but I'd like to get, again, with this rotation coming all the way off that high, right, and back down, I want to get underneath that range. Let them hit it once, let them hit it twice, and basically buying into those stop losses going higher. Now, what if we pop back higher here? If we pop back higher, same thing, right? The range is still a magnet, but now what's the problem? Now the problem is we're bullish with momentum. So how do I sell at the top of the range, which is not a bad place to sell? How do I sell the top of that range though, right? Without hanging myself to dry, right? You know what I mean? Let the buyers try twice, right? So as they pull back here, buyers try once, buyers try twice, and again, same variations. I can draw my trend line over, right, and use that trend line for the short. What happens a lot of times is the market will kind of come back, pull back, go lower. Professionals will wait above the highs. Same pattern, right? One try, two try, short off the high. So it's basically the same idea. Just make sure, again, I really want to take out, right, some of these highs and lows. Get me below the lows. Get me above the highs. I really don't want to be trading inside the middle. And if we do have to, look for traps, right? If it runs lower, comes back up and tries to go higher here, look for traps. Right? You can use the same pattern without having to trade inside. Just wait for traps. Right? Remember what I said earlier? Traps are my go-to pattern when I'm worried about buying high, or in this case, right, selling too close, right, to or buying too close to that trading range. Now, one more thing you want to be aware of. We can really negate this momentum if the market simply goes sideways here for a while. right? So, I mean, if we just start to cruise sideways here, it honestly makes our job pretty easy because now all we need to do now is measure the pendulum swing. Right? Don't forget the pendulum swing. If you've learned one thing this week from me, I hope for goodness, it's the darn pendulum swing. It's about as close to magic as you're going to get when it comes to trading, right? But once we have that range, and if we start going sideways here, you know how much they went above it. Now plot the move below it, right? And what do you do down there? What do you do there? You wait for the price to break down. You wait for the bears to come in. You wait for them to try to sell off that pullback, one try, two try, and back up into that trading range. Now, remember, if we go sideways here and the market pokes higher, I still have momentum as bullish. So I still have to wait for the 1, the 2, and short that sucker back down again. And remember, move up, right? Move down. You know where your targets are, right? Target back to the range. Got to leave that runner, right? Got to leave that runner, especially end of month, end of quarter environment. And then don't forget, too, if the market sits inside the range, there's 2 breakout patterns, too, right? What are those 2 breakout patterns? The first one is the 1, 2, 3 breakout, right? 1, 2, 3 breakout. Lots of strong moves. None of them have held so far, so don't try to get too aggressive there, right? 1, 2, 3 breakout. Mark that high, mark that low. First test is the best test off of that low. Or, what was the other one? A 2-try breakout, right? This one requires strength. Got to have a lot of strength in that one. Strong move up, shallow pullback, higher high, trap low, right? And we're good to go. Same basic idea here. It's just give me some strength, right? Give me some strength, right, as we go. Where would these buyers be hunting for? We get that 1925, right? 1925. That sounds close enough, right? 25 half, right? 25 even as we go. On the sell side. How about the sell side here? What does a bear market look like? Where are they trying to go? They're trying to go back into that range. What's a range? It's a magnet. Right? It's a magnet. You don't need all the volume profiling stuff, right? If you put a volume profile on this right now, right, you would see a lot of volume up here because that big range from 2 weeks ago, right? You'll see it. It would basically look at this, right? A volume profile right now will look like that, right? That's what it looks like. I'm pretty sure it will, right? Range from there from last week, right? The range from today and that big range right from earlier on this week here. That range below will be the magnet if this thing goes strong move down, pull back to the moving average, jump off the moving average. You got it, right? Mark the low, mark the high. First test, right, is the best test. But you might be wondering, well, Joe, what if it collapses? What if it just collapses? What if the bottom falls out of it, right, and it runs? What if it just starts grinding lower here and we don't get the pullback? Then what do? You wait for that shallow pullback. Whatever you get, you wait for that trap high and you hit it. Right? Put your back into it a little bit, right, and give it a good hit, right? That's what you want. All right? So if it does collapse there, don't chase after it. And remember, I'm always trying to find those kind of hidden channels, right? Always trying to find those hidden channels to get short off of those highs. All right, guys, I've beaten up your ears too much here tonight on this video. Got a great plan of attack though for tomorrow, Thursday morning, brand new month, brand new quarter. We got jobs, right? We got jobs. We've got manufacturing tomorrow. Man, oh man, it should be another great day in the trade room. I hope to see you there with me, 8 o'clock Eastern time. It's easy to get registered where you can grab all the information you guys need to get registered for every morning's trading session in the description of this YouTube video. So grab that link in the description. Don't forget, you can always call me in the office if you guys have any questions whatsoever. We've got live chat on the left. We got live chat on the right. And we're always here to help out if you guys need any help along the way. So please keep in touch. And as always, right, make sure you're there tomorrow morning. If not, as always, see you guys tomorrow night on the next edition of our nightly newsletter. Hope you guys love the video tonight. Make sure you subscribe. Drop me a like, right? Drop me a comment if you guys have any questions. And whatever you do, don't miss tomorrow night's trade session or tomorrow night's newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.